General Motors reported earnings before the market opened on Tuesday, and the market reacted really positively. The company reported great numbers for the first quarter and also raised guidance for all of 2024. So it seems like everything's moving in the right direction for GM. And I think this is another one of those examples of GM doesn't really get a lot of attention in the market or a lot of love from the market. Shares trade for 5 or 6 times earnings, 0.3 times sales, whereas a company like Tesla is getting a lot more media attention and trades for about 10 times more than that from a price to sales or price to earnings multiple standpoint. So as an investor and as a shareholder in GM, what I'm really looking for is for this to be a cash flow machine long term. When a stock is trading for that cheaply, you want to see the business moving in the right direction, but you also want to see them aggressively buy back shares and return that money to shareholders. And that's exactly what we have seen over the last year at GM. That is one of the reasons that GM is massively outperforming Tesla in particular in the auto market over the past year. And I think GM's earnings today and Tesla's earnings later today are going to really tell two very different stories in the industry. But that's what I'm going to dig into is what we learned in results in the conference call. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go through some of the earnings presentation first, and then I'll fill in any details with some of the press release and financials. These are the highlights from the quarter from GM. Retail sales grew 6% in the US. I think this is one of the surprising numbers is that General Motors, a legacy automaker, is actually growing at a time when a lot of people think that the future of vehicles is electric vehicles. Well, it turns out a lot of people want to buy ICE vehicles, internal combustion engine vehicles. And so that's exactly what we're seeing here. Very strong demand. There was a 36% increase in deliveries for Ultium electric vehicles. That's their electric vehicle platform. So there is momentum on that side. It's a very small base, so I don't want to read too much into that, but they are investing a lot of money into electric vehicles. A lot of the investment phase has ended, and now they're going to start introducing more of those vehicles this year and hope to get to what they call variable cost profitability, meaning they're not going to include their fixed costs in that calculation, but basically the price of what they're selling minus their cost of goods sold. They're hoping to be break even by the end of this year. Not a real high bar, but at least progress in the right direction. Ended the year with $1.16 billion in shares outstanding, a 17% reduction year over year. There was a accelerated stock repurchase program, ASR, that they announced in November, late November of 2023. That caused most of the reduction in the shares outstanding. But that's exactly what you want to see when shares are trading at this low of a price. Generated $23 billion of adjusted auto free cash flow over the last 24 months. I'll get to guidance, but they're expecting strong free cash flow from the auto business in the future as well. The biggest story is really strong demand for these vehicles, trucks and the larger SUVs. This is a Chevy Tahoe in the bottom right. This is one of those cases where there's not really a lot of competitors to this vehicle. And especially these very large trucks and SUVs. So General Motors has a huge market share, 66% full-size SUV market share, up almost 3 points year over year. So just doing phenomenally well, particularly with the Tahoe and Suburban. Also growing with these mid-size trucks, so a little bit smaller, but the GMC Canyon and Chevy Colorado are ones they were very excited about on the conference call. And then I think the big surprise is these really small vehicles, the Chevy Trax, Buick Envista, very, very cost-effective vehicles. You can get into one of these for $25,000 brand new, and they've been extremely popular. So it really looks like General Motors is playing to two ends of the market. You're playing to the high-end truck and SUV market, so very expensive vehicles, and then very low-cost vehicles. Not really focusing in the middle. You're not seeing the sedans that were really popular in the 80s or 90s. But this is ultimately where the money is right now in vehicles. They do have some launches on the ICE side expected this year. Nothing really earth-shattering. And then electric vehicles are continuing to ramp as well. These are the notable launches for this year. Cadillac Escalade IQ. This is one I'm interested to watch because it's going to be a very, very expensive vehicle. But the Escalade is actually a really popular SUV. So are they able to transition that to an electric vehicle and actually make money on it? I think that will be very interesting to watch. And it really seems like they're leaning into this Cadillac brand being the leader in SUVs. I do want to highlight Cruise. They got a few questions of this about Cruise on the conference call. Cruise is getting back on the roads, and it seems like they have a plan for scaling the business. First, it's going to be in the Phoenix area, get to full autonomous driving after they go through this mapping phase they're currently in, and then testing with the safety driver. And then they'll get back to basically the robo-taxi business that they had previously. But Cruise is also running out of cash, about $700 million in cash on hand. So they need to raise funds. GM can obviously step in and do that, but they may also be looking for outside partners. So it'll be very interesting to see how they handle Cruise going forward. This is ultimately what I was the most excited about when I initially bought shares of General Motors. Has not gone particularly well, but it is nice to see that they're going to be back on the road soon, and there's at least a plan to grow the business. We'll learn more about this over the next 6 months to a year, I would say. They said they're planning a investor day for the fall, so we'll see exactly what happens there. So not any major updates, and I guess I wasn't expecting anything major from Cruise, but just kind of steps in the right direction. This was the bigger news item, and if you're going to take anything from this video, this should be it right here. On the bottom, what you see is what they announced for guidance for 2024 after the fourth quarter results were announced. So previously expected $12 to $14 billion in EBIT adjusted, increased that by $500 million. Similar trend for earnings per share, increased that by 50 cents, now expecting $9 to $10 per share. So this is why you're seeing shares are trading for 5 to 6 times earnings. So shares are really trading for 4 to 5 times earnings, $45 per share. If they do get to $10 per share in earnings, that's a PE ratio of 4.5. So just still, it's still just a crazy valuation, despite the fact that the business is doing so well. Auto free cash flow expected to be $8.5 to $10.5 billion. There are a couple things that they talked about in a number of ways on the conference call, but they are expecting prices of vehicles sold to decline throughout 2024. This is just what they're modeling. So they're basically laying out to investors, hey, when we give you guidance, these are some of the assumptions that go into that. That didn't actually happen in the first quarter, so that's one of the reasons that numbers were a little bit better than expected. But keep an eye on that. I think they're giving relatively conservative guidance even with these numbers, so don't be surprised if at least results come in on the high end of these estimates. I'll just run through some of these comparisons because this compares to a year ago, so you kind of get a trajectory of the business. And you can see that earnings per share adjusted $2.62 up from $2.21 a year ago. That's really largely in part because of that reduction in the share count. So this is why buybacks can be so impactful when you're buying back at the price that we currently have shares trading at. And the EBIT adjusted margin dropping just a little bit to 9%. So not a huge surprise there. They did set those expectations relatively low, but just something to keep in mind. This is the EBIT adjusted walk. So kind of pulls through all of their businesses. You can see that GM North America doing relatively well. GM International was declining. They did get a question about maybe divesting or shutting down the China operations, especially given everything that's going on with the US and China. Mary Barra kind of punted on that, but it will be interesting to see what they do there, given the fact that they did divest their European operations a few years ago. So definitely something that should be on the table, given how weak that business has been. GM Financial down a little bit, which you might expect given higher interest rates. And then obviously you have losses at Cruise and corporate and elimination. So in total, small increase in EBIT adjusted. But what I thought was interesting is where the growth came from. Volume was actually up in the quarter, especially GM North America. This is the volume for their different segments. GM North America up 69,000 units. GM International down 38,000 units. So this is the competition that you're seeing. So selling those smaller vehicles that are a little bit lower price, that's where you're seeing a negative impact. So they're selling more vehicles, lower average sale price. That's the way to take these two things and then add price in that. That is just actual price reductions from actual vehicles. Cost has come out of the vehicle. So this is cost reductions. That's why you're seeing it being a positive number. So you add all of these things up and you get to the increase of $100 million to $3.9 billion in the quarter. So just an interesting set of changes here. More volume going through the system, a little bit lower price vehicles, being sold, but they have reduced costs a little bit. So in aggregate, things are about flat. And as an investor, I think that's fine given the fact that shares are trading at 4.5 to 5 times earnings. The one notable thing is that inventories are up a little bit. It said that inventory days were 63 days at dealers. So that's kind of at the peak that you want it to have. They Talked about that being fine going into the summer selling season, but keep an eye on this because supply is exceeding where it was a year ago, so that may lead to a little bit of price pressure. There's also some shutdowns at some of the factories for their trucks and SUVs in the second quarter, so that will also help with the dealer inventory side. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The final thing I wanted to highlight is the balance sheet. And one of the comments that I often get about General Motors is, well, but this company has $100 billion worth of debt. That's not exactly true. And this really lays things out here. So they break this down into their three segments: automotive, Cruise, and GM Financial. And then reclassifications or eliminations are what's anything that is sort of crossed between the two, and we don't want to double count. So that's why this section is here, because when you get to the combined numbers, which is what they actually report to investors, all of these things are included. So the automotive business, you can see right here, has $11.9 billion worth of cash, $7.8 billion worth of marketable debt securities, so securities that are going to be generating interest. You add those two together and you get $19.7 billion worth of cash. So that's on the automotive side. How much debt does the automotive side have? Scroll down here just a little bit. There is $15.9 billion worth of automotive long-term debt. So net cash in the auto business is about $4 billion. This is why GM has cash to do the buybacks that they're doing, because the auto business has plenty of cash. Cruise, you can see here, Cruise is basically a startup, so it's going to be burning through cash. Has about $700 million in cash right now. Does not have debt. There is actually a little bit of debt on Cruise's balance sheet, but not a huge impact on GM overall. The bigger impact is going to be GM Financial. And this is the financing arm for GM. This is basically like a bank. That's why debt in the financial arm is not the same as debt on the auto arm. So $5 billion worth of cash, $41.9 billion worth of receivables, $43.9 billion worth of long-term receivables. This is the debt that people owe on their car loans or their car leases. And so how do you get $85 billion worth of money to lend out to people? Well, you take on debt. That is where the biggest debt load comes from for General Motors. $70.3 billion worth of long-term debt under the financial arm. But again, that is like saying that a bank taking out debt or having deposits that they owe back to people is a bad thing. And no, it's not a bad thing. If you're loaning out money at 6% and you're borrowing it at 4%, that is a phenomenal business. That's what a finance business does. That's what a bank does. That's exactly what GM Financial does. So if you're looking at GM's debt, you don't want to include this because it does not impact the auto business. What you want to look at is this number right here, $15.9 billion worth of debt. Just something to keep in mind when you're analyzing General Motors. So the market's reacted relatively positively. Shares are up almost 5% as I'm recording early on Tuesday morning. So I think there's a lot to like from General Motors. I think the concern in 2024 was going to be that higher interest rates, maybe a little bit weaker economy was going to impact sales, particularly on those high-end vehicles, those trucks and SUVs that can be $60,000, $70,000, $80,000 really easily. But that doesn't appear to be the case. It appears that there is plenty of demand for those vehicles. I mentioned this in my preview video, but a lot of the price that's coming out of those vehicles was actually price that was added by the dealers. If you might remember, during the pandemic, there was dealer markups. Usually there's things like dealer discounts. So dealer margins on each vehicle sold expanded dramatically during the pandemic. As prices kind of get back to normal, it's those dealers' margins that are going to get squeezed first, and General Motors is going to be squeezed last. And remember, GM gets to control how much supply there is in the market. So they can control how much supply and demand are going to interact with each other and how much price they're willing to give up. So that's one of the reasons you're not seeing such a negative impact, even if the price you see if you go to a dealership may be a little bit lower than it was a year ago. That's probably the dealer taking a little bit less profit per vehicle than they were at that period of time. So it's a little bit of a steady as you go quarter for General Motors, but that's okay given the valuation for shares. I do want to see improvements with Cruise later in the year, and I also want to see that there's actually momentum from a demand side for their electric vehicles. If both of those things happen, this is a company that should maybe be trading for a little bit higher multiple. 4.5, 5 times earnings is not an expensive stock at all. It's one of the best value stocks out there. But the risk with auto companies is always that there's something that's going to happen to demand that's just going to crush margins in the future, crush profitability and the balance sheet. But it doesn't appear that that is on the horizon right now. So that's why shares are doing so well. It's why I'm keeping it in the asymmetric portfolio. But what do you think about results from GM? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.